Our final speaker this morning is Doug Niven. He leads the Australian Securities and Investment Commission's financial reporting, surveillance and audit inspection programs. He's also responsible for the development of financial reporting and audit policy and for external liaison and accounting and audit related matters. So please welcome Doug Niven.
Thank you very much. I think it's good today to get a slightly different perspective, the regulators' perspective. I heard a little bit this morning how regulators are to blame for all of the problems here, and I think the mere fact that the FMA has been good enough to actually organise this is a good demonstration of the view that regulators are taking, that this is an important issue to focus on, that we are very much concerned about getting useful and meaningful information for investors. So I'll give you a bit of a regulator's perspective and also let you know some of the things that are happening in Australia as well. Some of the objectives I think are fairly important just to lay out. As securities regulators, you can understand that we're concerned about making sure that investors and other users in the financial report can have confidence in the financial information that they're receiving and can make informed decisions. So that's pretty fundamental. Obviously, that's very much supported by the quality of the financial reports. Now, we've been saying for some time the key thing there is that you are actually getting that useful, meaningful information through the financial report and the associated documents. And obviously, how the information is presented is a very important part of that. One of the things to bear in mind, though, is that different users actually need different information. So if you spoke to an analyst and said, well, what information can we take out of the financial report that's not needed, that's causing clutter? Usually the answer is, well, we actually use everything. I remember asking an analyst, well, what about the movement analysis in property, plant and equipment? People often say, well, that's not particularly useful information. Can you take that out? They said, no, actually, that's one of the most important pieces of information. We use it in making adjustments to work out maintainable earnings and so forth. So it seems as though they need more information, whereas perhaps it needs to be presented differently for others. So I thought I'd start with perhaps some of the challenges. And it is important that people take the challenge here and look at ways that financial information can be better presented to get that more useful and meaningful information and make sure it's not lost in unnecessary detail. First one I thought I'd mention is increasing complexity in businesses. Well, we now have businesses, they're operating across borders in different markets, exporting, importing, using complex financial instruments. So there's a lot of complexity in businesses themselves. I remember we were having a discussion with a group of audit committee chairs around, there's quite extensive disclosures around remuneration of executives and directors in Australian financial reports, and it can take up 20 pages in the director's report that accompanies the financial report. And everyone's saying, oh, well, you know, this is a real problem. It's caused by the complexity of disclosures. Now, one director of a large listed company got up and he said, you know what the real problem is here? It's not the disclosures, it's the complexity of our remuneration arrangements. And there's some truth in that as well. So the complexity of the business is actually part of what's driving some of this. We've already talked about the different users and the fact that they all have different information needs. So how do you actually deliver information that caters for all of those different people who may need more information or perhaps need it presented in a simpler way and perhaps telling the story? So I'll come back to some of that in a moment. It's already been mentioned, the liability concerns for directors and also for auditors, although I was interested in that one because in Australia we actually have one of the most generous liability regimes for auditors. Well, that doesn't seem to lead to less complexity in financial reports either. If you are going to present information in a better way and apply your mind to it and think about what disclosures are needed, how they can be presented, it actually does require significant time investment. And everyone is time poor, and directors are included. And so when it comes to having a look at this, sometimes people say, well, we've got a lot on, well, perhaps there's something to think about next year. But making the investment can make a big difference to the users and how they can read and understand the information. Materiality, a number of people have already touched on that one. That is a real problem, and it's good that the IASB is engaging with this issue and will be giving more guidance going forward. It will be difficult because they'll try and give some examples and they probably won't meet everyone's circumstances, so they can be misread. But it is really hard for people to understand. We've found what are material disclosures. Auditors struggle with it all the time. Some auditors will say to me, there's no such thing as a material note disclosure. Well, I don't think that can be right either. So it sort of cuts both ways. So what are some of the considerations in thinking about how to do this better? And Sharon's touched on a number of these already. I did borrow a line, which was mentioned by Murray earlier, from prospectuses. Clear, concise, and effective. It doesn't actually apply for financial reports, but it's a good one to think about because there's some tensions there. How can you show things more clearly, more concisely, but also in a very effective way? It's also thinking about, yes, unnecessary detail can distract from what are the really important messages. And so how do you bring the most important information forward? Part of that can be about reordering notes to the financial report, but part of it's also about the information that surrounds the financial report and how you tell the story. Yes, it's also about plain English, getting rid of the jargon, trying to simplify the language, and Sharon gave some good examples there. But also about telling the story. How does it all fit together? We've got all of these numbers. It's incredibly valuable information in the financial report. It tells you a lot about the historical performance of the entity, accountability, gives you a good base for where it's going from here in terms of looking forward and valuing the company. But what about the whole story? I'd have to say a real challenge is also flexibility versus comparability. So if we are going to look at things such as the streamlined financial reports that Michelle talked about and Sharon also gave an example of, it is actually about presenting the information in different ways for different companies in different orders that bring out the key messages, and that's very important. But as a part of the process, it also means you lose some of the comparability and the ways to actually find the information. So I'll come back to a possible solution to that in a moment. And another thing to think about is also one that was touched on earlier, which is the accounting standards themselves are actually getting pretty long. You look at them, they're over 2,000 pages long, so they're pretty complex in themselves. Well, why is that? And part of it is because people are looking for the answers to specific problems, they want the specific answers, or they're coming up with answers that don't quite follow the principles. It's a little bit like why tax legislation gets so big and complex over time. And so it is a matter of preparers, auditors and so forth having a look at the accounting treatments, trying to apply them in accordance with the principles that are there in the standards, applying genuine interpretations, looking at the substance of transactions. What is this transaction trying to achieve? Is it being reflected appropriately in the financial report? Then perhaps you don't need as much detail in the standards either. Now, I thought I'd also mention material disclosures because I heard earlier on regulators are part of the problem, that they're requiring compliance. Looking at immaterial things and requiring the information to be disclosed. I can tell you now, we've had a financial reporting surveillance program running for many years, and I look back on about the last 15 years, and one of the things we're very careful of is not to follow up companies in relation to immaterial disclosures. I know in some countries they do that, but we don't. We're looking at the big things. What is affecting the net assets and the profits that are being reported? Having said that, it needs to be balanced as well. There are some very important disclosures that we often see are missing from financial reports and ones that investors have been asking for. And they're around things like the key assumptions underlying the very subjective judgments around asset values. Investors are looking for these, they're required by the accounting standards, and yet you often don't see them. Now, we met with the firms in Australia recently and had a discussion about these disclosures. And it's interesting how much they've read down these requirements so that virtually it's very rare that you'll see these disclosures. If there's an option in the accounting standards, that's an option. That's not a key accounting policy choice, so that's okay, you don't need to disclose that. It doesn't say anything in the standards about quantifying it, so you should never, ever give the number. It doesn't say anything about giving it in future years, so if you do ever really have to disclose this, only disclose in the first year, don't disclose in subsequent years. Well, the discussion then went on. I said, well, that's interesting, but you, the auditors, investors are saying they want this information and you're going to have to disclose it in the auditor's report in the next 2 years. And you're telling your clients not to put this in the financial report. that's going to be a major issue. And certainly companies are saying they don't want to be seeing things in the auditor's report that aren't being disclosed in the financial report, but it's actually about giving this important information. It's very much getting onto the journey. Now, there is no perfect solution to this. If we had the answer, we'd all be doing it now. But certainly it's going in the right direction and looking at things about how the financial report can be better presented and making the investment. Now, speaking to some of the companies who've tried something similar to Chorus, they actually said to us it took them twice as much time to prepare the financial report in focusing on how they could do this better. And some of the companies that have tried this in Australia for 30 June 14, I've just listed there. It's called Streamlined financial reports, that's a PwC term. So if you have a look at the financial reports of some of those companies there, Wesfarmers, Stockland and so forth, you'll see that they've made an attempt at this. Doesn't change the balance sheet, the income statement, but is about reordering the notes, bringing the more important ones forward. It's about putting accounting policy notes, as Sharon mentioned, together with the relevant notes that they relate to, with the numbers. It's also about having a look at how you might get rid of some disclosures that perhaps are no longer needed, they're being carried forward from year to year, what's really material and so forth. But it is a real challenge to do it. I do think one of the challenges is going to continue to be how we deliver information that different users need, along with those other challenges I noted. But unless you start the journey, unless you try to make the change, then you can keep complaining and people can keep complaining about the value of information they're receiving, but unless you start, you'll never get there. Thanks.